As human beings, we do what we see others do. Simple. Now, social proof is so ingrained in the way we function. A lot of times we make investments because somebody else is making and we believe their judgment. Some of the ways to avoid social proof from impacting your investments. You're walking in the beach with your loved one, and as you pass the first person, you notice that he is looking up into the sky. And as you move, you encounter another person who is also looking up into the sky. The immediate reaction for you is also therefore to look at the sky. Next, you've gone to a concert, and the violinist, after the Carnatic singer has performed their piece, the violinist doing an encore. And as he is coming to the conclusion, one person starts to clap. And immediately the rest of all the hall follows and the clap is thunderous. Third, you go to leave your chappal in the temple that you always visit. The stall, the footwear stall, says free for devotees, and it kind of specifically shows the board that it is free. Yet, when you go to retrieve your slipper and the volunteer is giving your slipper back, the person ahead of you gives a 1 rupee tip. Immediately we have an urge to follow through, dig into our purse and give a 1 rupee to that person. Although logically we know that this is a free service. This is what is called in behavioral terms social proof. As human beings, we do what we see others do. Simple. We've grown from children to adult watching others behave in a certain way, and that's what we do as well. And it's so deeply ingrained in us. It's a survival strategy. That's how we've survived as a species. Imagine 50,000 years ago, our ancestors, 4 of our ancestors walking on the savannah. And down there in a bush, they heard a rustle, right? What vaguely looked like a saber tiger. 4 of your friends with whom you were walking took to their feet to start running. Now, if you were a more curious one and stepped closer to the bush to see what it was, your descendants are not in the planet anymore. It is those 4 of those guys who took to their feet fastest who now survive, whose descendants now can live and speak. Probably my ancestors were one among those guys who took to their feet very fast at that time. Now, social proof is that as long as you saw one of your friends running, you ran, even though you didn't know why you're running, right? That's what social proof is all about. Now, social proof is so ingrained in the way we function is that you would have noticed that in the comedy show, after the comedian has delivered his piece, there is a clap that comes automatically that the producer of the show initiates. This is because if you have not got the joke, you will still clap because the audience there is appearing to clap for the comedian. So that's what social proof is. Now, in the investing world, social proof has tremendous consequences as well. I'll give you a simple example. About 6-8 months ago, there was a large tech company that came out with a public issue. A lot of buzz around it. It's a large IPO raising thousands of crores of money. The IPO price was something like 2,000 plus 2,200 thereabouts. Now, unfortunately, after the IPO, the price of the stock has come down all the way and it's now hovering at about 800, 700 thereabouts. Almost 2/3 has been wiped out. Significant amount, right? Now, imagine why all the investors crammed to buy into that stock at the IPO price. And believe me, you will find the answer because Mr. A, B, C, some of the largest investors were investing in that stock. I also went in. I didn't read, I didn't find out whether it was up to me or it was in my interest. I just went because I think that A, B, C would have done a very, very honest assessment and they are putting their money, so I would also put their money. A lot of times we make investments because somebody else is making and we believe their judgment. That's one. Second, social proof is also the reason why Stock markets always get the largest amount of monies when stock market is absolutely at the top, which is actually not a great time to be investing in stocks, and rarely get any money when the markets are at their lowest ebb. So when stock market is crashed at its lowest point, rarely does it get any money. Whereas it gets all its money, 90% plus of the monies come closer to the stock market tops. This is classical social proof model. Because everybody is investing, everybody commits money only when the stock market is high. When the stock market is at its all-time low, everybody is taking money out of the stock market, irrespective of the fact that stock market is very, very, very attractive. Some of the ways to avoid social proof from impacting your investments. First up, if you've already mapped your financial goals with investments that you're already doing, then there is no need to get pressured or influenced by what somebody else is doing, therefore having to follow. You just have to keep pace with your own financial journey, and that will see you through. Second up is that when you talk to friends and they tell you an extraordinary investment opportunity, always probe a little further. Most of us talk about our best experiences to our friends. Now, that's not the only experience we have. We have a ton of bad experience, and I know this because I have encountered people who've talked about fabulous returns in cryptos. And when I ask them that, can you tell me how much of money you cumulatively invested in cryptos and how much you made balance, you really know that out of 5 times that they've made investment, 1 time they got very good returns, but 4 other times they lost money or the value was below water. So it's important to probe a little further. Also understand that this fear of missing out, FOMO, is an emotion like many other. It will pass. All you need to do is just give it a little time. Every time you are given a new proposal, you need not dive at it because we are all impacted by this FOMO factor. So just give it a little time, mull over it if you really need to kind of go with it. Last but not the least, check whether you have a temperament for this investment. Each of our temperaments are very different from one another. What suits another person may not necessarily suit me because I am temperamentally a different person. If you checkbox all these aspects, I am sure your investment decision will be much better than merely copying somebody, which is what social proof is all about. The case study on this aspect is of an individual that I met about 7-8 years ago. This was a gentleman in his early 50s, and he was due to retire in a span of about 7-8 years. Incidentally, he retired very recently. And this gentleman comes from a very traditional background, traditional family where they are not exposed to risks, they don't take risks at all. So all his money at that point in time were in fixed deposits or bank or so on and so forth. And one of our thing was, given that he had 8 more years and there was a need for him to accelerate to create a slightly larger corpus because he was working in a private company, we suggested to him that he needs to do a little bit on equity mutual funds, which is a lower of the risk but slightly more riskier than what he was exposed to. But he was extremely reluctant because in his near and dear family there was nobody who was doing these kind of investments. So he said he wasn't very keen to kind of go that route. He spent a lot of time in understanding these kind of instruments and finally gave a go ahead when we said it's only 20% of your money. 80% continues to be what you do only 20%. That too, do it for 3 years, and if you see something happening positively, then you can increase the quantum. But 20% is good enough to start with. And that's how we started. Guess what? When the gentleman retired recently, that 20% which he has invested yielded him a substantially larger return than the rest of his corpus. Now, he may be thinking that, why didn't I do a larger chunk? But of course, that's always the case. But this 20% which he did he did with great reluctance because nobody in his immediate social circle was doing any investments, and he considered, or his family considered, these kind of stock market based investments very risky. Now that is overcoming the social proof, and the way we did that is to kind of work with him with a financial plan and with numbers and convinced him on this aspect. So there is always a way to overcome social proof. All you need to do is keep your eyes and ears open.